Good morning, everyone. Andy Tuttle here with the Tuttle Group at Fairway Mortgage. Hope you're having a great week. Here's the DFW mortgage market update. We do it every week just to make sure you know what's going on in the markets, how that affects interest rates, and how that impacts you when you're looking to buy or sell a home. So this week we had a lot going on in the markets. We saw the stock market go over 22,000 multiple days in a row of record highs as usual. But bonds were able to rally in the face of that, which is unusual because stocks and bonds compete for the same investment dollar. So typically if stocks are rallying, money is coming out of bonds, and that causes rates to go up. That didn't happen this week until, of course, the jobs report came out. So let's go to the charts and talk about it. So this, again, mortgage backed security chart. This is a price chart, so the higher the price, the lower the rates, and the lower the price, the higher the rates. You can see a rally since July. So if you're still out there looking for a home and you got pre-approved in the beginning of July, rates are better for you right now by 1/8 to 1/4%. So that's great news. We had a really nice rally just in the last couple of weeks. And the jobs report, though, put a little bit of a halt to that. So jobs report came out hotter than expectations. The BLS report, the Bureau of Labor Statistics, that they reported that there were 209,000 jobs created in the month of July. That was about 31,000 better than market expectations. There were also some slight revisions to May and June that were a little bit better. So overall employment gains in May and June combined were about 2,000 more than previously reported. Also, the unemployment rate decreased from 4.4 to 4.3%. Big news, though, the average hourly earnings rose only 0.3%, which is good because when hourly earnings raise too much, that looks like wage pressure inflation. Bonds do not like that. So since inflation is in check, the bonds didn't react too negatively, but they did close below this important support line. So we did not get the rally we had hoped for in the jobs report. We had kind of hoped for, not that we want less jobs, but for rates in general. Short term, a little worse jobs report would have helped the bond market. That didn't happen, so we're back into this trading range here, hoping for a breakout next week. We locked a lot of people yesterday that had contracts and closings, or on Thursday, but right now, you're going to be in a carefully floating position if you don't have a contract, and we're going to see what happens next week and see how this trading range goes. Real quick, let me show you what's coming up next week. So this is next week. So we've got a very light news week. It's going to be the end of next week that we're going to see some news that could be market moving. So in the first few days, there's going to be a lot of the technicals are really going to be what determines what happens in the market. So if you get a contract over the weekend, we'll have a loan and lock strategy call early next week and give you our advice. But we've got a little bit of good news here that we can carefully float and see if we get some better news next week and get up into that higher trading range to see some better rates for you. If you have any questions, if you need anything at all, you know we're here for you to help with your offers, to help you with your pre-approvals. Any questions that you have, we're here for you. Happy hunting out there, and we'll talk to you soon.